5 individual dividend-paying stocks that could be undervalued as of right now, even with the stock market trading pretty close to all-time highs. Drop a like down below, stay tuned, and let's get into the first one. So the first single stock that could be offering a substantial buying opportunity, even with the way the market is trading at currently, is ticker symbol EMB, the oil and gas transportation company, Enbridge. Now, Enbridge is a stock that I added to my portfolio a few months back. It is a small position compared to the rest of the positions in my portfolio, but this company does have a pretty good track record of paying dividends, raising dividends, and is trading at a discount as of right now. Now, right now, the dividend yield for Enbridge is around 7.5%, and as you can see right here, the 5-year average, if you look closely, it is trading towards the upper end. With the way that Enbridge is trading, it is offering towards the upper end and the higher end of a dividend yield. Now, the dividend safety is also important when it comes to buying any dividend-paying stock or ETF, and with Enbridge, dividend safety is currently a 70 according to Simply Safe Dividends, which especially for a yield as high as this one, is relatively safe if you ask me. Now, Enbridge is trading in the mid $30 range, and although it was trading a little bit cheaper a while back, this stock just as of recently has popped up once again on my radar, on my screener, offering a potential buying opportunity. Now, that being said, if you are already exposed to oil and gas, you know that most of your positions are already probably sky high just because of the way that oil has traded as of recently. So with that said, you're not going to be getting the all-time best deal when it comes to this area. Now, Enbridge also has a low beta, relatively speaking, at 0.71, which I like for my long-term portfolio because I don't like too much volatility, at least not in the main portfolio. Now, because I'm seeking out dividend-paying stocks for you guys that are on sale, the dividends are of course important. And just for starters, dividend growth, let's talk about. Dividend growth for Enbridge is pretty fast if we zoom all the way out over the past 20 or so years, but as the latest in the last 5 years, it's about average. But again, because you are getting such a massive starting yield, I don't think anyone's really complaining. Now, lastly, Enbridge does have 71 years of dividends without a reduction, so again, the dividend should be safe, at least if we were to go off of historical data. And on top of that, 28 years of consecutive increases, this stock definitely is one to look into, especially if you are not exposed to the sector. The next dividend-paying stock that could be offering a buying opportunity still, even though it has moved up in price a little bit more because the ex-dividend date is coming up soon, is ticker symbol VZ or Verizon. Now, Verizon, with the way it's been trading as of recently, is now yielding just above 6%, and I say just because not all that long ago, Verizon was offering a starting yield of around 8%, which was massive. Verizon's dividend safety has been argued that the dividend might not be as safe as it was maybe a few years back, and I would have to say I agree with that. Although even with Verizon's debt load, I think a 70 safety score is pretty fair. Now, Verizon is currently trading in the low 40s and has sort of been sitting around there as of recently, although I think because the ex-dividend date is coming up very soon here, we are going to see this one move up towards the $45 level, somewhere near there. Also, Verizon has a very low beta at 0.42%. Verizon is a large position in my long-term portfolio, and although Verizon hasn't traded all that well in the past few years, and honestly, I'm still down on my position, because I've been able to sell cover calls and generate a ton of income through the dividend, Verizon hasn't been the worst position overall. Now, for the dividend chasers out there, beware, because Verizon has been known to be a little bit of a yield trap, but again, it all depends on where you buy into it at. But all in all, Verizon has around 40 years of dividends without reductions and 17 years of increases, although the increases are pretty tiny. We're talking like 1 or 2% increase per year, so you're not really going to get super rich off Verizon's dividend growth by any means. All to say that Verizon still could be offering a slight buying opportunity, but just know that with anything there's going to be some risk along with it. The next single stock that's offering a buying opportunity, not the best I've seen all year, but still a slight buying opportunity, and I'm adding some more shares personally, is Main Street Capital or ticker symbol MAIN. Now, Main Street Capital is offering a 6.13% forward yield, and that's pretty tiny considering Main Street Capital was offering north of 7% not that long ago, and a few years back, Main Street Capital was offering an 8, 9, or 10% yield. But since Main Street Capital has been moving up and up in price, on top of that offering special dividends, investors have been piling on like crazy. Now, Main Street Capital has been a position in my portfolio for several years now, and honestly has only moved up into the right for the most part and paid me dividends, and like I said on top of that, special dividends along the way. Now, Main's dividend safety is around a 62, and because Main Street Capital is a business development company, I think that dividend safety is pretty fair. And even though Main Street Capital has a relatively low beta at 0.6, I do think that as time goes on, this stock has been a little bit more volatile. Now, as far as dividends and dividend growth goes, because Maine has also paid special dividends, which are dividends on top of the normal dividends, it's sort of hard to say exactly how much this one is paid. But as far as this data shows, Maine's up their dividend around 2 to 4% per year more or less, and Maine pays on a monthly basis, along with special dividends as you can see right here, which have been a nice treat for Maine holders. As far as I can see moving forward, Main Street Capital will probably be on my watch list and my buy list on maybe a weekly basis, considering I really want to grow a position in Maine as time goes on. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Another single stock that's still on sale. Luckily still on sale. I say luckily because I've been still able to gather some more shares for pretty cheap. Is ticker symbol or Realty Income, one of my largest positions across my entire portfolio. Now, Realty Income is currently offering almost a 6% forward yield, which I think is going to be much lower as Realty Income moves up in share price over the next year if and when the Federal Reserve drops interest rates. Now, Realty Income, the monthly paying dividend stock, has a 0.65 beta. And even though Realty Income has historically raised their dividends sort of slow, honestly, anywhere from around 3 or 5%, because Realty Income does have growth potential in my opinion, and also pays monthly, the small but steady dividend raises have been very, very much so appreciated. On top of that, Realty Income has 55 years without a dividend reduction and 29 years of growth. But most of all, of course I could be wrong, I think Realty Income will be trading north of $60 per share within the next 12 months or so, but it doesn't really matter too much because I'm buying Realty Income more as a long-term dividend play, but on top of that, I want to see some long-term appreciation as well. Now, the last and final single stock that could be offering a buying opportunity, and a stock that I don't see get talked about enough, is ticker symbol PSA or Public Storage. Now, Public Storage is of course a self-storage REIT, and honestly I started investing in PSA a while back because I love the idea of having some exposure to self-storage units. And what better way to do so than invest in PSA? Now, first of all, the most obvious is the fact that PSA's dividend as far as Simply Safe Dividends goes is a 96, making this, as far as dividend stocks go, one of the safest dividends across not only the entire sector, but across the entire market. PSA, because it's been beat up in share price, at least somewhat as of recently, is offering a 4.23% dividend yield. And even though PSA's dividend growth is sort of all over the place, you can see that over the long term, PSA has raised their dividend pretty consistently, and with the most recent dividend raise substantial. Now, PSA has paid a dividend for several years, and more importantly, I think that's when interest rates get dropped, I think we could see this one trading much, much higher. So if you're an investor that wants some exposure to this side of the REIT sector, and also if you want to lock in a well north of 4% yield with a very safe dividend safety, PSA is definitely one to look into. So there we have it, guys. Those are 5 different single stocks that I still think are offering a buying opportunity as of right now. Now, out of every single stock we went through in this video, I want to hear from you guys down below. If you could only invest into one for whatever reason, which one would you buy and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.